let's get to our guests here on stage one. Delighted to introduce Sachin Tandon, Global Banking Industry Strategist at AWS. And we're also joined by Benjamin Maxim, Chief Digital Strategy and Innovation Officer at MSU Federal Credit Union. Welcome to both of you. Welcome to FinTech Live New York.
Hello, thanks for having us on.
Thanks, Nate.
You're very, very welcome. Right, we have a lot to get through over the next sort of 35, 40 minutes or so. So I'm going to be very brave, actually, and start with an enormous question to begin with. And for both of you, what benefits does AI really bring to the financial services industry? And I know that question on its own could take up our entire time.
Absolutely. Ben, you want to go first, or I'm happy to, whatever.
Go ahead if you want.
Sure. So what I would say is if you think about AI in financial services, we're seeing broad uses of AI in financial services and how AI can benefit financial services. And this could be really looking at, if you look at from a end-to-end journey that you think for an end consumer that literally a bank deals with or an insurance company deals with, you're really looking at AI transforming various stages in that journey. So as we look at our customers that are banks or other financial services firms, they're enhancing various touch points that the customers are having across that journey, whether it's an onboarding aspect or looking at the servicing aspect. So there's definitely enhancements coming from an AI perspective there. There's an aspect of looking at how fraud prevention is happening. And AI is benefiting that in terms of helping with real-time fraud prevention. Certainly looking at, if you look at text extraction or document processing, AI is benefiting there as well, like really helping speed up some of those processes that were manual and can be more automated. There's a lot of benefit that's coming from leveraging some of the machine learning capabilities that are out there within the financial services world. And as you said, I mean, there's definitely much more to add, but I'll let Ben chime in here as well.
Great, absolutely, thank you. No, that's a good primer, and echo all of that. And I think, like you said at the open, this could be our whole topic in 30 minutes or 45 minutes of talking. So, just some highlights. In addition to what was already said, I think personalization is a huge part of where AI plays in the financial services industry. We have endless data at our fingertips, and it takes a lot of power to be able to do something with that. AI and machine learning are great ways to enable that and provide a personalized experience for our customers, consumers, members. We're looking at insights. We're trying to be more predictive. We're trying to be more proactive in helping people better understand their finances, how to use them, how to deploy them to benefit them, how to improve their financial wellness, increase their financial literacy. Also, a lot of advantages on the enterprise side for financial institutions to improve operations. Whether it's document processing, automation, really, the possibilities are endless. We also use it for customer support, member support, where we have a conversational AI chatbot that takes about 15 FTEs worth of work in volume of our live chat, and working on expanding that to our voice offering as well for our call center. Both are areas where we struggle to hire people since the pandemic, and it's really been helpful to kind of alleviate some of the volume that has also come in due to the kind of digitizing of the world that's happened since the pandemic rolled in a couple of years ago.
Because if we can just stay with the issue of and the question of chatbots, it's a place where an awful lot of customers have contact with different businesses. Do you feel it's reaching a point where using AI in that kind of space is really becoming frictionless now? It's no longer a negative experience for a consumer.
Yeah, I think there can be if it's deployed poorly, but I think some things we've learned since we deployed our chatbot first in 2018, 2019, that members, our consumers need to understand that they're interacting with, an AI, and if they do, they give it a little bit more grace and know to work with it, know it's trainable. I think, a lot of the news and press related to ChatGPT lately has also taught more people about conversational AI in a way. I know it's a little bit different being generative AI, but it's really kind of that interactive bot experience. It's also been helpful for our employees to understand that, when we roll out these bots, we're not actually taking away their jobs. We're helping expand and augment what they're able to provide and really allow them to focus on things that, the human agents are good at, and really use the digital agents, the virtual agents to help do the complex, the mundane, and really expand our service hours. We're a credit union, we can't do 24/7 call center. So we're able to kind of tailor experiences that make sense in the middle of the night, because we're using these bots that otherwise our members wouldn't have access to service, and they really appreciated having the access and knowing that things are being handled, even when it's by a bot. In the middle of the night, they're happy to just have it kind of on our plate instead of on theirs.
Because what learns have there been through that process? I'll put that to both of you about the implementation of them, because it's an industry and it's an area of the market that's rapidly growing.
Sorry, can you repeat the first part of that?
The first part of that was, what have the learns been about the implementation of using chatbots and AI to be customer facing?
Yeah, for us, really it's been, being purposeful with what it is, and also understanding that, people will ask, a conversational AI, anything they think it should answer. So, if you're setting out new or you're working to improve yours, just know that there's a wealth of data that will come in and inputs to help you understand how to focus and train your bots to answer the questions that your consumer base is looking to have answered, which is one great thing. You don't have to figure it all out up front. We have created a couple of positions within the credit union to treat kind of the management of the conversational AI training set as though we would a website delivery channel, where that content always needs to be updated and maintained. You can't just set up a website and leave it sit static for 10, 15 years. So we're doing the same thing. We have a team that looks at the content and the information that our institution needs to put out to our members, and we're constantly training and adding that into the bot, and then also reviewing all the conversations and making sure that there's enough training data to provide the right answers to our members.
Yeah, and I would add to, from a chatbot perspective, the other thing to keep in mind is that when you have the chatbot, from a customer experience perspective, right, when a customer is dealing with a chatbot, what you want to make sure is you're maintaining kind of that transaction or the history of what they're talking. So let's say if a customer is engaging with a chatbot and they're then transferred over to the agent because the chatbot is not able to resolve, you want to make sure that the agent is seeing pretty much kind of the log of the transaction log that so far the engagement has been, so that the customer is not having to repeat all that. And that's a critical thing as we look at chatbots, because otherwise what would happen then is the customer has already communicated and now they're having to repeat that, which is not a great customer experience. So that's kind of one thing I would say is important as you look at from a chatbot perspective. The implementation that's kind of being done is how are you making that seamless and frictionless as you engage with the agents then from that regard.
Moving on to how we use AI to analyse data. How do you think it can be used to really identify early signs of risk, for example?
Yeah, I would say AI has helped many of our customers identify different forms of risk. So we could look at, we could talk about fraud detection, right? So AI is helping from a fraud detection perspective. We've seen many customers do look at real-time fraud detection. Example would be like New Data is one of our customers that actually is built, what I would say is fraudulent detection algorithms using anonymized data points. So they're looking at behavioral biometrics, which is really looking at the typographical rates of the consumer, their behavioral habits as part of the engaging with the bank, and really factoring that into fraud detection. And that's really different from what typically you would look at just from a sign-in perspective. You're doing a login or password. So there are things happening in that space from a fraud detection. Certainly from a credit risk assessment perspective, we're seeing customers starting to look at alternatives from our data where they're trying to say, okay, do we go beyond FICO scores? Can we really look at risk? Let's say looking at rental payments or utility payments or other aspects of what the consumers have and factor that into the risk decision making. So that's kind of what I would say is the other aspect. One other thing I would add is really, as you think about like loan valuations, identifying like catch rates for troubled loans. AI can be beneficial in that as well. Fannie Mae, one of our customers, has actually looked at that and really been able to improve their catch rates by benefiting from leveraging some of the machine learning capabilities and really being able to proactively determine what could be potential troubled loans. And that really kind of benefits there as well. So I would say many different uses there that we're starting to see, which are helping from a risk perspective.
do you feel we're only scratching the surface with that particular potential at the moment?
I would say so, yeah. I mean, there's certainly more to do there, but definitely these are some good examples of what we are starting to see. There is much more as we look at companies starting to engage more with large data sets, the large foundation models that we're talking about. There's definitely more uses. And I would say overall, in terms of AI, we're still kind of at the beginning phase. There's much more to do there.
Moving on to the question of bias. How can we minimize the possibility of bias from AI in the whole financial services marketplace?
Yeah, I mean, we talked about, kind of the credit risk and the underwriting part, and that's where probably the biggest concern from regulators and examiners come in for the bias. Are we going to just do virtual, redlining or anything like that? And then we got to make sure that the models that we're using to do the underwriting, those are going to be trained on AI, but you're not making an AI-based decision on every loan decision. So automation is really the consistent application of a model that's been built off of all this data that we have at our fingertips, and that's where the AI is powerful, and that really allows for the explainability. It allows for the consistency in applying the model, and it also allows for kind of the instead of it being a black box AI where you just feed stuff in and you don't know how it happens, you have kind of that glass box experience where you can come and see this is how things flow through the kind of the underwriting criteria. I also think, as we're adding additional use cases with conversational AI, that's where, some of the, bigger tech companies have gotten themselves in trouble when they've done unsupervised learning and just throw things in their chatbot and they go off and learn on the internet how to speak. And, there are things on the internet that may train it depending on what it's looking at, to, include some bias as well. So I think AI is an opportunity, as long as it's supervised. You have people looking at, the training data, making sure the training data is diverse and representative of what you're trying to accomplish, and remove the bias that way. And then kind of bringing back the kind of alternative data that we were just talking about in the last question. Something like a FICO score is inherently biased, in the lending process and the underwriting process because, at some point in your life, to have a FICO score, you have to have some relationship with a financial institution. And while not everyone has that access, so there's a lot of underbanked and unbanked individuals that wouldn't be able to qualify for loans in that FICO model. So being able to use some of this alternative data sets really helps move more to a cash flow based or looking at other things that does make the lending experience more inclusive and ultimately reduces bias in the whole experience.
Yeah, and I would just add to that, from what Men mentioned about the data aspect, right? So from a machine learning perspective, it's really important is the data that's going to train the models, right? And that's where the bias can really get into the model. And so having the right kind of data governance practices around that, having the people trained to be able to detect bias is an important part of just kind of before you even feed into the model, that's what's training the model. So bias can creep in from a data perspective. And then when you think about kind of models that have already gone into production, how are you making sure there's no model drift happening, right? So the model was determined based on a preset of data, preset of assumptions, but things change, right? Things change in the environment. Is the model really being updated, or are you starting to see model drift? And what are you doing to adjust to that, right? And so, if a model is looking at when the time there was COVID, the models would need to adapt to the changes that are happening that that pandemic is presenting. And if it's not, then your model is being based off of assumptions that are no longer valid. So there are things that need to be thought through as you look at to minimize some of the bias aspects that could creep into this.
As the expression goes, you've got to be able to embrace the good. There's plenty of good here, plenty of potential, but there's also bad. There's potential risks, I suppose. Bias is one of them. What other risks do you both see associated in using AI in banking?
Yeah, maybe some of the bigger ones is assuming that you can just use AI as a replacement for the humans in the process. There still needs to be humans. It's just it changes what role they have, right? So you have people now instead of maybe being directly interfacing or working some of these queues or reports or any different things we have. You now have AI that's processing the data in large data sets, which that's what computers and AI are good at doing. But there still needs to be humans involved in the process to verify it, to make sure bias doesn't creep in. If you're using AI in a like conversational AI or in a customer service regard, you can't just throw everything at ChatGPT and hope for the best. There still needs to be that fallback to a live agent when things get more complex or customers get frustrated. So I think maybe the biggest risk is assuming that you can just automate everything and get all the humans out of there and save some money. Well, ultimately, you're going to destroy the experience. So really trying for a blend of AI, digital, and human interaction, is really probably the way to go, both, for your employees and also your customers as well.
Yeah, and I would say model explainability is an important part there, right? So when you think about models that are being used to do AI, a lot of times it can be a black box, and you really, while the output is good and it's clear, what you're not clear is how did you get to it. So, for example, if you're getting to a credit decision based on completely based on an AI model, and you're not able to provide the transparency on how you got to that decision, then at that point, that is kind of something that needs to be looked at. And are you factoring in just that one, one output, or are you looking at other outputs as well, or other factors that a human is then making a decision? Those are things to think about. I think Ben was really getting that as well. Like not solely relying on the AI model is one of the risks that you could run into.
Okay, let's just go to some questions from the audience quickly, and then we'll come back with some more that I would like to go through. First one: are there any areas of operation where you think AI could be used more, and is AI being used to its full potential?
Are you ready? Go ahead.
Go ahead.
Sure. Yeah, so I think, a lot of the areas we are just scratching the surface. I think probably the biggest area of opportunity and direct opportunity is customer experience. And that's, kind of end-to-end customer experience. So experience, in person, over call center, just end-to-end opportunity. How do you automate pieces? How do you use AI to augment? How do you use AI to suggest topics for the call center agent to share? How do you make it easier for them to access, the kind of the knowledge base of the institution to make it a smoother conversation, a more consistent conversation? I think, risk is a huge risk, and fraud, and probably fraud is the bigger angle here. And I know there's a lot of people trying to solve this. There's a whole reg tech industry that's kind of sprung up, but AI has a huge potential because there's as many AI kind of bad actors as there are good, if not more. So being able to put the AI, against the other AI, trying to introduce the fraud in the first place, I think it's going to be a huge thing. I think ChatGPT is going to allow both synthetic fraud to happen more, but also an opportunity to help combat it.
Yeah, and what I would say is certainly I would say AI is we are just scratching the surface in terms of what we're doing. There's a lot that can be done. In addition to looking at kind of from an end-to-end perspective, I guess from a bank's perspective, they can think of it as like, how are they transforming lending, right? So if you take lending transformation, are you looking at that? Where are the opportunities, for example, to really introduce AI into the process? So that really you're looking at not just the customer experience, but also how are you transforming the employee experience internally, right? So because in the end, CX and EX both together is really what's going to give you an overall total experience. And so what we're seeing some of our customers do is they're enhancing the touch points, which the end consumers are getting benefits out of, but then they're also looking at internal processes and saying, okay, how can I benefit putting like machine learning and AI to my agents? An example just on that would be like, we talked about call center agents here, right? So if let's say a call is coming in, a customer has either interacted with the chatbot or directly coming into the call center or talking to the individual, we have technologies now that can actually understand what the customer is calling about, and based on what they're saying, find information that is relevant for call center agents to actually talk to the customer. So think of this as normally what would happen is a call center agent gets the call, they're understanding from the customer, then they're trying to find information sometimes through the internal information databases. And AI is now able to pretty much proactively render that information. And we have some services in like Amazon Wisdom, Connect Wisdom that actually does that, which really allows agents to now see that information. And now they're actually not spending their time trying to find information, but they're actually able to quickly share that information back with the customer, right? So again, one use case, but there's many other use cases where we're starting to see or AI can actually benefit from even like from an internal employee's perspective as well. So definitely a lot more to do there.
Okay, we'll go to one more question from the audience before we continue. This is from Suresh. How do you anticipate the FinTech ecosystem will adhere to the privacy, compliance and regulatory needs when it comes to the use of AI?
Yeah, so I think, FinTechs, as they start to partner and work more closely with financial institutions, when we've partnered with a number of different FinTechs, we've invested in a few, and as they start to understand the regulated environment that we work in, they start to understand the rules, they start to understand where does that data privacy fit in, and understand that they have to adhere to that, otherwise they're not going to go very far, with the partnership. They can go it out on their own, and the ones that do, have mixed results. But if they're going to leverage kind of the trust that financial institutions have built with their customer base, that's going to be hugely important, especially if they're trying to go to a global scale. There's different rules, regulations in different markets, different segments of the world. And the ones that are doing well tend to value that and find, how to be successful there. But I think a lot of companies, and FinTechs are not excluded from this. They're trying to do something new and different, and sometimes they're pushing the envelope, and sometimes really, and it's not necessarily how do they maintain their privacy and data, but really helping the consumer understand what they're doing with that privacy and data, because most consumers are willing to give privacy related to their data as long as they have the say in how it's used, and also if they get a value for it. So if they're delivering value to the consumers are going to be willing to give a little bit on the privacy side.
Yeah, consent is key there, right? The consumer consent needs to be there.
Yep.
As you're talking about sharing the data and the privacy there. But certainly we see a number of the customers that we are seeing on our side, banking customers are engaging with FinTechs, partnering with FinTechs. So there's definitely more happening in that space. But certainly privacy and compliance is absolutely key here.
Absolutely. Well, we touched a moment ago, Benjamin, you were talking about it a second ago, about whether people would miss the human or physical interaction. It comes with a human being, when you're dealing with your bank or financial institution. For you, how much work is going into understanding that relationship and making sure that everyone makes good decisions about it?
Yeah, so I think there are a lot of companies trying to solve it. I think there are companies that are really trying to humanize kind of the robotic experience. There are people trying to put avatars, talking head type things on ATMs and video teller machines and things like that, to really try to make that experience seem more human-like. There are also others that are using kind of the approach that the humans need to be there when they need to be there, but there are kind of use cases where people are more comfortable not interacting with the human. I think there's a lot of intimacy in dealing with your finances. So there's some research going into, can some people, especially in low, moderate income situations, where they may feel, shame, or they don't understand or don't know about finance, and they're able to talk to bots or use digital experiences to maybe open a conversation and learn more, and how do we engage and build a digital relationship with those people so they're ready to talk to us when it's time. I think my generation and generations coming after, we struggle wanting to call up a pizza place and place an order that way. We want to use an app and have a pizza tracker tell us how to get our pizza and when it's coming to the door. And COVID, I think, only exacerbated that, where it could just show up and you could do a contactless experience for everything. Everything can just show up at your door. You don't have to talk to anyone. You just order it in an app and it shows up. So I think the more we've gone through that, though, I think, if you read the paper and a lot of the studies, there's a loneliness epidemic in the country, at least the U.S. I'm sure it's everywhere in the world following the pandemic and remote work and all the other things that we're doing. So there's got to be a balance where, what is the right use case for human interaction? What's the right use case for digital? And there's a fit for both. And really, it's how do you blend the two together to make a robust both consumer and employee experience.
Yeah, and I would say, we all know, we've come a long way from when we used to go to branches to then go to online, and then now mobile banking pretty much has taken the forefront of this, right? So there's definitely the speed of innovation has exacerbated in the last decade, and certainly post-COVID, in terms of what some of these digitized transactions are. What I would say is also it's about some of the easy stuff is being definitely automated, right? And that should be so if a customer is calling in to check the account balance, change the password. Don't need to talk to an agent for that, right? You could just automate those things, whether through chatbots or other features you can add through your digital experience. But the things where agents can help is more around where they're providing value-add service to the customers, and that's where the human interaction still has value. I'll give you an example here. Like we have a digital bank here in the U.S. that's actually that doesn't have branches, so it's pretty much a digital bank. So for them, obviously, they've built a good customer experience from the digital side of things, but then their only human interaction they have is when the customer talks to an agent, when they're calling in for certain activities they want to cover. So they've actually put in a lot more effort in making sure that that's the only one time the customer is going to interact. We want to make sure that experience is superb customer experience. So while they have great mobile app and everything, but they have spent their energy and kind of, I would say, their investments from the call center agents to make sure the experience is superior when the customers do get to that channel. So those are things like some things people are starting to consider as part of this as well.
Now, one thing you've both touched on sort of briefly there is, and I want to dig into a little bit more, is how do you think AI will either aid or detract efforts to increase financial inclusion?
Yeah, we touched on earlier a little bit around the alternative sources of data, right? So as we look at banks are starting to look at, can they make credit lending decisions, and even non-banks as well, like in terms of using alternative sources of data. So rather than relying on the typical FICO scores that we talked about earlier, really, can we use rental payments? And we see Fannie Mae has done something very recently around that they're using rental payments as one input to the decision-making process. This is really allowing you to get to some of the underserved segments of the population, because now, whether if they didn't have a good credit history or let's say they never had a chance to build that credit history yet, there are alternative ways that they are being considered for being able to get a loan or get a credit, and that's really helping. And these kind of efforts that are being made is also helping branch out to like other segments of the population that were not included previously as part of the financial discussion. And so that's definitely kind of happening there from inclusion perspective. And like another thing I'll point out is like we talked about COVID earlier, right? So take the example of insurance companies. They were doing underwriting. Prior to that, you needed like in-person medical examinations and those kind of things were needed. But during COVID, everything was shut down. Everything was locked out. There was no in-person examinations happening. So they started relying on alternative sources at that point, which were looking at, okay, can we look at a person's health record, look at their biometrics, genomics, and other things. And now you're starting to find a different way of underwriting that insurance, which, having done that through the pandemic, they're now looking at those models to say, can we use this for inclusion of segments of population that were not there first? So definitely, we see that AI is benefiting and really helping with the financial inclusion, because you're able to process disparate data sets, which are not your typical data sets, and be able to generate insights to fit into your decision-making process.
Yeah, maybe I'll add to that as well. So kind of to that personalization angle that AI allows for and enables, will allow institutions to tailor different messaging, different experience, different products to different segments of the population, making it more inclusive. There can be a more focus on financial literacy, more educational content that's tailored to someone's specific experience, be more proactive in understanding someone's financial situation, and really be kind of a guide or a coach, digitally for them, versus it just being, well, make sure you go log in, 8 times a day to look at your account, and it's kind of up to you. But really being more proactive with it will really help enable it. I do think, kind of maybe to talk about the other side of the question, there is an opportunity for AI to become more exclusive, especially if it gets to more higher tech and different data sets. If there's not that kind of concentrated focused effort on eliminating bias, looking for it, and making sure that we're not just focusing on serving kind of the ultra high affluent customer bases that some institutions have and focus on. So making sure that we're using AI as a way to kind of level the playing field and serve multiple segments of our customer bases.
We'll get on to some more of your questions in just a moment, but before we do that, one thing I did want to look at in particular is it can be very easy for us just to look at the higher end of the market when it comes to the implementation of AI, because largely the higher end of the market has the money to spend on that kind of technology. But for smaller and more medium-sized financial services firms, including fintechs, they might not have the resources, they might not have the in-house technology available. How can they benefit from AI soon in a cost-effective manner?
Yeah, so what I would say to that is a couple of things that come to mind. One is about leveraging the pre-trained AI models that exist. So there's a number of AI technologies out there that are like providing you the foundational models. So if you think about like document processing, we have services such as like Textract, for example, that can pretty much do that foundation for you to process information, classify information in the documents and do that. So there's various other models that already exist, which small and medium enterprises can actually leverage off the bat, rather than spending the time to, develop those models. And the key thing you mentioned is resource constraint, right? There was the time when people used to develop models, so spend 6 months developing a machine learning model, and then at the end realize, the data kind of assumptions have changed, or this is not the right model. Now you can do that in a matter of hours, right? You can take an pre-existing model, see what the data, what the model kind of is generating for you based on the inputs you're looking for, and then decide, do you want to customize that on top of it to add something more specific? But what you've now got is a foundation that actually is, to some extent, being leveraged across industries, and you're not spending time building on the foundation. You're really more spending time on what's the custom or specific aspects that I want to look at from, as in a small and medium enterprise, they want to look at from what they're looking for as part of their individual journeys or kind of what that is. And so that's one thing. And the other thing I'll just point out there is around the ISVs aspect, right? So there are a lot of other independent software vendors out there that have developed services that can be quickly leveraged right off the bat, and that allows you to do a quicker implementation in a more cost-effective manner than trying to worry about how do I even get started? Do I need to hire people that have this right skills? Do I have to now train them to do this? Now you're getting a lot of this capabilities available to you in the market that can be leveraged either through pre-existing models or, as I said, through partnerships with with independent software vendors.
Benjamin?
Yep, absolutely. So, I work for a credit union, a large credit union, but still a credit union. So on the small end of the whole kind of financial spectrum in terms of institution size, we've kind of taken a strategy of that partnership model where we look to fintechs, we look to our kind of key big tech vendors, ones that work with our core system, ones that do, big data stuff on their own. And how do we leverage what we're already using, and how do we leverage their innovation resources and really be a partner to them and say, hey, you want to try something out? Hey, we'll be your kind of guinea pig sometimes, and that allows us maybe access to technology earlier or sooner or at a lower cost than we would be if we were not maybe in the early product development part of the life cycle. But yeah, really looking for also fintechs that are just starting out as well. Ones we've invested in, invest in to get discounts. In actually deploying, their services to our members. Also, looking at consortiums, industry consortiums as well, to pool together resources from multiple institutions. So one thing that credit unions do very well is collaborate together. So we have a few key groups that have kind of pooled resources, and we can learn from each other and share. And that way, we can, as a collective industry, try out some solutions before each individual institution has to try it one by one.
That's fascinating, the idea of being a guinea pig for some of the emerging technologies. That must be absolutely fascinating. Yep. Moving on to some other questions from the app. Again, thank you so much for getting in touch. Next one, in your eyes, are regulations keeping up with AI digitization?
Yeah, I think they're trying. I think they're behind, and that's good and bad. I think a lot of what's happening in the regulation or compliance side of it, especially with data privacy in the U.S., is really more market-driven versus government-driven, like it is in with GDPR in Europe, and in the U.S. we have California Consumer Protection Act and the CFPB is starting to get involved, but it really, there's not a lot of clarity in what's happening, and it will have to catch up probably, reactively, like often does. So there is an opportunity for them to move forward, but at the same time, by there not being strict regulations in place, allows for some of that innovation to take place in the market. But there then needs to be that kind of extra caution to be careful with the data and the bias as we experiment as an industry.
Yeah, and I would just add to that is like regulation, I would say needs to be well thought out, right? And that's something that's going to be done. But like, depending on the use case, right? If you're talking about an autocomplete of a document, right? That's a different kind of supervision that needs to be done versus a credit decisioning aspect. And so those will be things that will need to be kind of thought through as from a regulation perspective as well.
Going to the next question from the audience. Thank you very much indeed. This one from Aaron. I'm just going to expand on your question ever so slightly, Aaron. I hope you don't mind. But it's about, do you think there are enough initiatives in place to help people stay on top of all the innovation that's happening with AI in the FinTech world to make sure everyone's got access to it and they can be part of this revolution?
Yeah, I think at least from my perspective, being a smaller institution, I'm unique in our industry. There's more people having roles like mine to really kind of vet and evaluate these partnerships, but there's not necessarily one place you can go to find all this information. So knowing where to look, and it's taken me a few years to kind of curate where are those places. There are more and more events though in the financial service industry, more FinTech events, more events like this one that we're at right now, where you start to get some experience and exposure. And I think, kind of the virtual nature of a lot of these events, or the kind of hybrid nature that kind of sprung out of the pandemic, allowed for more access to it all. But there still needs to be someone with focused effort looking at it, and that is challenging for many institutions.
Yeah, and I'd add from our perspective, like from an AWS perspective, right? So we are actually certainly we are at the forefront of driving innovation, and there's a lot of machine learning and AI capabilities that are being brought out in the market. We believe in democratizing machine learning and kind of make the efforts towards that, right? So our machine learning capabilities that are out there are available for being leveraged by a number of customers, and they can actually, leverage what's foundational, but also customize on top of that, integrate with other partners as well. So we're trying to certainly help with that innovation journey that a lot of companies are trying to go through. What I would say is there's still the efforts of like where companies should look at what is their innovation agenda, right? Have they thought through how are they going to drive innovation while continuing to keep the lights on in terms of the day-to-day business, right? So you have to really look at what is the focused efforts on innovation, how are you keeping up with what the market is doing, and making sure that you are starting to put a strategy or roadmap around how are you going to drive innovation as you go along that curve, and where are the priorities, because you can do a lot, right? But you got to prioritize on where maybe some immediate benefits and what are some of the long-term kind of investments that you want to make.
And I'll ask one final question before we wrap up this part of the panel, and that is for you, if there's one area of potential for AI that you've seen, one nugget of information that's really exciting you over the next few years, what would that be?
Yeah, I mean, I'll hop in there. I think there's a lot of potential. I think kind of the coolest thing is we're kind of at the next revolution in technology, right? So we had a web, wave of cool web technologies. We had a cool wave of mobile technologies. AI is kind of the next wave, I feel like. So, things like ChatGPT and really generative AI have kind of sprung out. And it's kind of like when the iPhone, smartphones came out, there was these devices with all these sensors. And at the beginning, they were kind of toys. Where you could like have silly things where it's a flashlight app that's just a white screen that lights up a room, or it's like a sound effects machine. But it really was, taking some time for industry to figure out software and kind of business use case to kind of catch up. And 15 years later, we can do things on a device that we couldn't do on a computer 2 years ago. So this is really going to enable, again, here's a huge leap forward for technology. What can happen there? So I'm very excited to see, as business leaders get their hands on this, as innovative people get their hands on this, what are we going to do with this technology once it kind of progresses through its evolution?
Yeah, I would agree with like AI being we are the kind of revolution of that, right? What AI is going to drive in the coming years. There's a lot still to be done. There's new technologies that are coming out in terms of generative AI that we're seeing out there. So there's interesting kind of things that we're starting to see in the market. We're still in the early stages there, but that will be the exciting thing to see how far does that go and what does that start enabling across financial service or broadly in general as well. How is AI starting to benefit and kind of transform the day-to-day life as part of this revolution? So certainly very excited to see what kind of is lying in the future for us.
But I'll do one last question if I may, and that is absolutely connecting this to the customer experience. As Susan asks on this question here, for you, how important is it? Will you make sure all of this excitement, all of this revolution is customer-centric?
I would say it's very important that this is customer-centric. In the end, we are customer-obsessed, and we like to see what is the benefit from a customer perspective. But we touched on some of the things about customer experience today from an end-to-end journey perspective. I'll reiterate the personalization aspect. That is absolutely what we are seeing as front and center, and that's where I would see AI kind of starting to benefit more and more and drive more and more personalization. Because from a consumer lens perspective, now consumers are starting to even more and more demand how is what we're being offered, or are we getting value add, which is really personalized to us. And that's where I see that more and more of that investments, or more and more of the channeling of where the insights are going is important, because I'll give you some examples would be where we've seen, for example, you could really identify based on customer insights, based on their usage trends, which are the customer segments that are more susceptible to fraud, or which are, let's say, customer segments who are actually spending more on like ATM fees, which are non-bank ATMs. And now you're starting to target your messages and really helping those customers in terms of how they can benefit from the initiative the bank is offering. And this is important because it's not just about and this is one of our customers that actually did this in the UK. They're thinking more from a perspective of what is the value add to our end consumers. There's an aspect of everybody wants to think about okay, how do we benefit and what are the more products we can give to our customers? But there is also an aspect of what's the value add, and that's where AI is coming into play, because once you get that value add to your customers, you're starting to build loyalty, and those customers are more likely to come to you when they're looking for your next product, whether it's in the banking space or other areas as well. But that's certainly the question asked. I would say customer experience would be front and center in terms of thinking about what is the benefit that's driving from an AI perspective.
Benjamin, I'll give you the final word on this.
Great. No, absolutely. I echo all of that was just said. I think customer centricity is key. I think in all technology revolutions, the companies that have come out on top of it are the ones that focus on their customers and how do you use the technology to deliver that great, fantastic customer experience, and AI will be no exception.
Absolutely. Well, I thank you both for joining us here at FinTech Live New York. It's been great to have your company for the last 45 minutes. It's been a really interesting conversation. You know what, we could talk about this for the rest of the afternoon, so we'll leave it there. Thank you ever so much for your time.
Thank you.
Thank you all. Thank you all for tuning in.
Thank you. Bye.